Hi, this is Zach May with the US Chartbreakers here at Zach's Traders Cafe for Friday, the 8th of March, and it's up and away still, heading towards that red resistance line there from back in September. That's currently pointing to the 52.10 zone, which we're looking for, especially while we're above the recent broken resistance around 51.10. Ideally, we stay above the floor of that red channel there around 50.60 in the meantime, but obviously this is a fast-moving situation, so the stop losses, etc., are difficult to deliver. Moving along to the Nasdaq, which has been echoing the progress in the S&P of late. Here we've had that 18,400 resistance line, which is actually now going up to 18,500 and maybe even 600 as the next target. Above that, if we can get through that, then it would be the top of that rising October trend channel as high as 19,200 by the end of next month or even sooner. In terms of support, we've got the uptrend line there from October at 17,900 now. If there was a rug pull, then probably towards the 50-day moving average area and the floor of that gap from last month, 17,500 would be the destination for this market. Moving on to the stocks, and starting off with a new name, and that comes in the form of Creative Medical. Here you can see that we've had a massive spike to the upside. The game now is really to work out how much the retracement will be back above $10 intraday. Ideally, it would be around the $5.50 area, which is where the pre-market is showing at the moment, and there wouldn't be an end-of-day close back below that old late September resistance ahead of a fresh attempt at retracing the big gains of Thursday. On to a situation which is probably rather better in terms of the charting. It looks like we've got a cup and handle formation here at Cellularity, just trying to break on the right side of that handle there, top of the channel there from back in April last year, heading for as high as $11.50. We're looking for that by the end of next month, if we can get a pretty quick end of day close through the old or the initial February resistance around $5.60. Another stock to keep an eye on over the near term is coming up here next, Composecure. Here you can see that we've had the spike higher from basically what was a bear trap below the $4.80 area. The question now is where the support will come in, ideally around the $5.60 area, which was the late December resistance and obviously the resistance area back in January as well. While we're above that on an end-of-day close basis, there's a chance of hitting the top of that falling trend channel from April last year, as high as $6.90 later this month. Moving on to another new name, and it's Enhabit. Here you can see that we've had this resistance line from back in July last year hit at around $10.25. We want to obviously see that broken to give us a move up to the post-December resistance of $11.50 plus. Otherwise, ideally, we stay on the right side of $9 because that $9 area was the support early in February. Interesting situation coming up next in the form of Heartbeam, and here we've got a situation where we're trying to break out of this triangle formation that's been in there since July last year, around $2.30. We want to see an end-of-day close above that to then give us a which was the turn of the year resistance for this market. The ideal scenario is that we stay on the right side of the 50-day line, which is currently around $1.80. Moving on to a stranger named company, which is called Kidpik. And here you can see that, in theory, we hit the top of that rising trend channel from August last year, just shy of $5. The key now is that we hold above the broken resistance line there from September, around $2.30. If we can do that on an end-of-day close, we could at least be looking towards $3.50, which is basically, or $3.40, which is basically the post-September resistance for this market. Next contender is Mind Medicine with a fantastic looking chart, gapped up obviously very strongly yesterday, but we've had the turnaround really since the 50-day moving average started rising back in December. Current view is that while we're above yesterday's support, around $7.40 on an end of day close, we could hit the top of that rising trend channel from June last year as high as $12.50 by the end of this month. Moving on to one of the frequent flyers here, which is MoneyLion, and here the picture is that we've been in a rising trend channel. We already hit the previous trend channel target there at $34, but we've got a steeper rising trend channel from last June, and at the top of the channel there heading towards as high as $90, which we may get if we're lucky by the end of next month. Ideally we stay on the right side of $60 ahead of a potential move to 90, given that the $60 area was the support. In fact, 58.41 was the support, but the $60 area would hopefully remain as support for this market. Next up is Onespan, and here you can see a gap higher after a rather strange price action, but actually it was a double gap down and then a gap higher, which is a bear trap island reversal. Looking for $14 here, especially while we're above the old post January resistance at $11. So ideally we stay on the right side of $11 ahead of 14 by the end of this month. Next up is a stock which hopefully will deliver for the bulls, Quantum Psi, and here you can see that we had a good consolidation either side of the 50-day line. Gap closed buy signal yesterday, so closing that gap from earlier in the week, and the view now is that hopefully we'll make some decent progress within a rising trend channel from back in October, the top of the channel there, heading for up to $2.60 rather by the end of this month. The key here is, I think, staying above the 50-day line, $1.75. Finishing off with a rather strange name here, so it's called Swvl, and here you can see that we've had a beautiful breakout there, hit one of our targets, already hit one of our targets twice, around $6.10, above $6.10, looking for the upper parallel of that resistance line projection, and that is pointing as high as $8.70, which we'll hope to see relatively soon in March. In the meantime, staying above the $6 area is the best thing for this situation. That's it from me today. More updates over the weekend.